Hey, welcome back to Cards and Comics, and today I have a little video I'm calling Copycat Investing, and really this is an introduction to risk management. I am a risk manager. That's what I do for a living, for the most part, and I'm taking this opportunity to talk about something that I see very often and happening in the hobby, and it's really around the idea that listening to influencers, listening to people give advice on what to collect. You see videos all the time, top 10, cards I'm investing, top 5 comics I'm buying now. These are the new things you should be going out and getting. It's literally half the content of collectibles and cards. Cards, comics, and collectibles. Channels on YouTube is to kind of tell you what you should be buying next. And I'm calling it copycat investing because really it's popular because of one real big one big thing, and that is it is a way to manage risk, because doing what everyone else does seems to be less risky than doing something on your own, or something you've investigated, but you may be the only one doing it, because wow, that seems really risky to be doing something only I or maybe a few people are doing versus sort of what everyone else is doing. And you see that very often in other types of investments and other activities where doing what everyone else does seems like a safer way of managing a risk, right? So so I call this really just a poor risk management understanding. So most people don't really understand risk or how to manage it. And so what I'm showing here is a very useful tool we call like the risk matrix. And here it's kind of showing you how we look at risk if you're working on how to manage risk properly. And you have two axes here. You have the probability of something happening and the impact. And if you look at the matrix, you can see, bottom right quadrant, you see highly unlikely events with minor impact, all the way to upper left where you see events that are highly likely to happen with devastating consequences. Now, so if you think about this from a collectible perspective, cards and comics is what I'm mostly interested in. And here there could be two things. One is value, right? So devastating might be a card losing all its value, or maybe it's something a little bit different, but it could be what's the probability of a player achieving the Hall of Fame for a long-term hold. So take a player that you're investing in. If he doesn't make the Hall of Fame, then the values are way down, right? So what's the probability, and can you figure that out? Can you actually do some math and figure out what's the likelihood of something like this happening? Or think about football. What's the likelihood of a player actually getting hurt or not being able to continue a season? What's the odds of that occurring? Because when you're investing in something like a cards, for example, football cards, there's a lot of risk with injuries, right? Is there a way to predict it? And in general, there is. And so, one thing we look at is probability or likelihood of events to occur. And so, is there ways to actually do this? Are people actually able to make predictions? It doesn't seem like this is something I can predict. It's almost like act of God type situations, but that's really not true. Is people actually can predict and have looked at these situations and how often some of these events are likely to occur, and you can actually find them out by just doing some research on your own. But the reasons why people don't look into this, because one of the things that I see quite often is because everyone else is doing this means that somebody at some point has done some research and has concluded that doing this means that the bad things are less likely to happen. That I'm reducing my risk or the probability of a negative outcome by doing what everyone else is doing because someone somewhere has done the research, right? Like can I predict a player to be injured? Well, guess what? There's websites and there's a lot of things out there to look at. How often does injuries occur, and can you predict how often a player will be injured? And here's a website dedicated to predicting injuries, how many games, so on and so forth, right? The other question I asked, can you predict if a player is going to be in the Hall of Fame? Well, let's go look at it. Yes, you can. So there's these things called Hall of Fame statistics. And if you look at like Mike Trout, you can see that, on these different statistics, which this will tell you what all these mean. And I'm not going to get into this whole, statistical debate, but if you look at it for an outfielder, Mike Trout already has, for a center fielder, already has the 5th overall highest career WAR of any player. So right there, I mean, he's already a Hall of Famer. And by every other standard other than just one, he's well above what a Hall of Famer is. And if you look at, an average Hall of Fame center fielder, he's way up there, right? So and his comps by age are like top tier Hall of Famer. So again, Mike Trout is, when people say, why is Mike Trout such a safe investment? Why are people so into investing in Mike Trout? Is because he's already done everything necessary to be a Hall of Famer. He could quit tomorrow and he's a Hall of Famer. He's already achieved what's necessary. But take a player like Joey Votto, and you can see, he's close to being a Hall of Famer. But if you look at an average Hall of Famer, he just falls short, right? On 2 of the 3 metrics here, he's just slightly short. And so, you'd say Joey Votto might be a good investment if you think he's going to have a few more good years, or at least enough years to generate more stats to push him over to the next level. But he's definitely one of those on the on the edge of being a Hall of Famer. And then someone like Joe Mauer, who had a huge card spike, during 2020, and you look at his statistics, and only on a couple of measures is he close. But when you get down to catcher, from a WAR perspective, he is 7th overall in career WAR for a catcher. And I think that is why people have singled him out. And he does have a few players in the Hall of Fame that's his comp. But if you look at it across the board, he is better than most average Hall of Fame catchers that are in the Hall of Fame. So does that mean he's going to make the Hall of Fame? I don't know. But it definitely looks like that people who are investing in him, looked at some of the stats and said, hey, this isn't so risky, right? But where a lot of people looked at that and said, this makes no sense. Why are Joe Mauer cards going up so high? There is ways to predict. So doing what everyone else does is not a good way of predicting what's going to happen. Doing your own research and actually doing some investigation into the likelihood of some of these things is actually a good thing to do, because it helps reduce your risk. Another thing that people tend to do when they're looking at how often something's going to happen is, they ignore warning signs and continue to do the same behavior that got them in trouble, or that's going to lead them to a bad outcome, right?
This is fine. I'm okay with the events that are unfolding currently. That's okay. Things are going to be okay.
So, when you look at the probability or likelihood of an event to occur, if you don't, do course corrections when there is these warning signs, then you're gonna increase your probability of bad outcomes. And I would say this, in the last 2 to 3 months, we've seen some really negative trends in car pricing. But to me, the most alarming is when I went to a show a month ago, and then the reports I'm hearing from other shows is that dealers don't want to buy inventory. They have too much inventory, not enough cash is being spent at shows, and therefore there is an inefficiency in the marketplace right now in cash flow. That's a warning sign, guys. That maybe there's something wrong with the market, and until some other things happen, maybe a good sign or a good time to change your behavior and do something different. Change what you're doing, because the odds of something bad happening are getting greater. And then one thing to really understand about this hobby, and I've said this before, that the hobby was built upon scammers, and there is no safety net for this asset type. It's completely unregulated, and in fact, it's one of the few industries where you can be a known scammer. You could have been sent to jail for scamming. You could have perpetrated some of the largest scams in the history of the hobby.
You will never find a more wretched hive of scum and villainy. We must be cautious.
And still be in the hobby and still be a major presence. I look at Ken Golden as a guy who's going to get his own reality show, they say.
I'm sorry, but that's ridiculous. You're darn right it's ridiculous. You want to talk about giving it away, America?
And he scammed and ripped off thousands of people already. And you look at his auctions, and I look at his auctions as being very fishy for some of the prices he gets. But hey, it's the hobby, right? And scammers are welcome here. So, that changes the probability of bad outcomes happening when scammers and people who have done bad things are allowed to continue to be in the hobby and be the ones in charge of things like auction houses and maybe even, how cards are graded and other issues so that are very pertinent to the hobby. So the next thing that people tend to do when they're looking at risk management is they underestimate the negative impact to them. So there's kind of this idea that nothing bad's going to happen because it's a hobby, it's fun, it's cards and comics. What could happen that's bad? A lot of people don't think the worst case scenario can actually happen. So nobody right now thinks that anybody from the 2020 let's say NFL class like Tua, Herbert, Burrow, they're all going to be Hall of Famers, right? That right now that's sort of the thought process and pricing is these guys are all on the Hall of Fame path, right? For the most part, I know Tua and Hurts are definitely not priced as much, but Herbert and Burrow definitely have some huge pricing out there, right? And nobody's out there thinking like, well, this guy is going to be the next Ryan Leaf.
Don't talk to me, all right? Knock it off!
It's almost like that's a scary story that people made up to scare investors, and people will kind of call you names for even thinking that. Well, guess what? Andrew Luck just happened. A few years ago, right? I think 2 years ago, Andrew Luck blew up people's collections. I know personally 2 collectors that had $1 million between the 2 of them invested in Andrew Luck cards, mostly high-end treasures and contenders. Those guys are left with 5 to 10% of their investment, right? It's awful. And Jesus Montero, I know people who were heavy into him. Oscar Taveras, there's a super collector out there that lost hundreds of thousands of dollars on Oscar Taveras. So the worst case scenario can actually happen. And so don't think that the cards cannot go to zero, because they absolutely can. The other thing that people don't really get is that people have different risk tolerance. Risk tolerance is basically how much you can absorb on the negative impact. How tolerant are you to be able to absorb the risk? If you can't absorb very much risk in your financial situation or personal situation, then you shouldn't engage in risky behavior, right? Think about it like, if you can't afford a divorce, maybe you shouldn't cheat on your wife. If you can't afford your Justin Herbert Prism card going to zero, you shouldn't be out purchasing them. And I think that is what people don't really truly do the analysis on is what they can actually tolerate from a risk perspective. Um, and then, one thing that I see a lot is they don't understand that other people have different financial situations. And I'm using the example of influencers is that, I look at a lot of these YouTube channels and I see that they're spending money and buying product and showing off cards. But how much is that is being financed by the channel and the money they're making off the channel itself versus money from their personal life that's being invested? Some have admitted, some YouTubers are very open and say, look, I don't invest any of my own money into this. It's all kind of fake money. It's all money I make from YouTube or from the cards themselves so that when I go to sell them. And so I don't have any real money. And so therefore they have very little risk into what they're doing, right? They've de-risked their whole situation. Whereas if you are someone who's saying, like I'm trying to like emulate this influencer, and I have kids, and I see this happening with them. Is I want this, I want to do what they're doing, and it's like, well, you don't have the ability to have that level of risk tolerance, so you shouldn't do that. And it's very difficult to tell someone like you can't have what they have. It's like a kid, right? You can't. It's very difficult to tell someone they can't have what someone else has. And so a lot of times we will take on so much risk to do that, to have what other people have, not knowing that they don't have the same level of risk that you have. And it can be very devastating when something bad does occur. And again, this goes to the psychological and behavioral aspects of risk management. That you got to understand that people will take on risky behavior because in some cases they understand the outcome could be negative, or understand that they're not engaging in behavior that's very logical. But human tendencies get in our way. For one thing, people will just say it's a hobby. I don't want to make this work. I just showed you some research you could do on how to make this less risky, but no, a lot of people won't want to do that. And again, the copycat mentality of investing is all around the idea that someone else did the work for you. That I don't have to do this work. These other people must be smarter than me. I'll just do what they do, and I'm gonna, I'll be okay. And again, it's a hobby. I don't want to make this work. But then, if you expect good results, you can't have it really both ways, right? You can't just do no work and expect positive things to happen, which is, I know human beings like to do that. It's like the best thing in the world. I do no work and good things happen to me, but that's not reality. The other thing I would just mention was the coolness factor of having what everyone else has. That's something that's very tough, especially when you're younger, and even when you get older and you see someone having these beautiful, amazing collections, and not knowing that maybe that person spent 30 years putting that collection together, or they have the financial resources to be able to build it quickly and dissolve it very quickly, and to them it doesn't matter, but to you might see that as being, wow, that's what I want to do, that's who I want to be. And it's hard, when you don't have the ability to do that. It's disappointing, and I know a lot of people will then put themselves at high risk and max out a credit card trying to emulate someone or to be considered cool because they have a cool card or a cool comic book that someone else kind of gives them validation that, hey, that's really cool, man. Like, sneaker guys are very much about that. Those are cool sneaks, man. Like, those shoes are really, really awesome that you have on, and that's all they're really going for. And so they'll spend a lot of money trying to get that validation. And we talked about, the big one is most people don't understand how to do risk assessment. They don't look at both factors, which are the impact and the probability, and so they may do one side of the equation, not the other side of the equation, or they don't really understand how to assess the risk, understand its impact and how how to judge it. And so they really just kind of like, if they do any risk assessment, is really one-sided or just not at all. And the biggest mentality, and this is really the box break guys, is to get rich quick. Just do something like buying a lot of box breaks and hoping to hit it big. And it's the same thing as people who really do a lot of lottery purchases. Is you're just hoping that you're going to beat the odds. And we know that from a risk and impact perspective, if you go too far in this direction, you will definitely lose. That this kind of behavior definitely creates a lot more losers than winners. So, the big thing is, and the one thing that, everyone should be looking at is how to reduce your own risk, right? How can you make this equation better for yourself so you have better outcomes? Well, again, preparing for the worst case scenario and then understanding how that would affect you, right? So understanding, again, the two sides of the risk matrix. What's the impact on you if the worst case, if the probability was 100 and, the worst case did happen, what would that do to you?
Oh my God. I'm never going to financially recover from this.
And if you don't prepare for it, what that could do, then you're really doing yourself a disservice because you don't really, you haven't characterized your own risk, and therefore you don't even know what's going to happen if it happens. And so you're really going to be unprepared. And a lot of people who've had this happen to them are people who, let's say, now they can't afford to make a car payment, or maybe they miss a payment on a credit card. They incur a lot of interest, which leads to a spiral of issues, right? So again, I'm not saying that everyone's in this boat, but all it takes is one or two events that are negative, that are worst case, and you could put yourself in a bad spot. Another thing is understand the historical trends and issues and risk associated with the collectibles you're getting. My example here is 1948 Leaf. My gosh, 1948 Leaf baseball cards have been some of the most trimmed and altered cards in the history of sports cards. And they have some of the most expensive sports cards ever made. Between the 48 Jackie Robinson, the 48 Leaf Satchel Paige, the Joe DiMaggio, the Ted Williams, the Warren Spahn rookie card, the Stan Musial rookie card. That set is one of the greatest sets ever made. It's also one of the most trimmed, altered, recolored, bleached, you name it, set in the history of cards. And you just have to go to a few websites like blowout.com and look at all the trimmed and altered cards there to understand that 48 Leaves have just a horrible history of altered cards. So if you're going to really invest in that set, you just got to understand your risk. And if technology improves to where we can detect those trimming issues and altered cards in the future, maybe those cards go way down in value. Maybe no one cares. Who knows? But you got to understand it before you invest hundreds of thousands of dollars, for example, in a Jackie Robinson card that may have been trimmed. Again, we talk about people have different risk tolerances, right? And just understanding that you keeping up with the Joneses is not a great way to manage risk. And then the last piece I want to show you is kind of what most people do. So this is the number one thing that most people do to risk balance when you do a collectibles or any other type of portfolio is, it's balancing, right? You balance a portfolio so that if one thing becomes very risky, there's another thing to offset it, and you have balance, and you hope that everything grows at the same time. But if it doesn't, something goes off the rails, you don't go to zero. And the example here is, you have a spectrum. So you have low to high risk. And then on that spectrum, you start buying assets. You start buying cards. And so something like a Jalen Hurts, 2020 Prism 10 is pretty high risk. This guy may never even be a starter. He could be an RG3 and be a career backup. But let's say you're going to say, I'm going to take a risk. I'm going to buy this guy. And in fact, you buy like 5. Jalen Hurts, and you spend over $1,000 on Jalen Hurts cards. Okay, well, if that's your whole portfolio, you're a very high risk. You could literally go from $1,000 to $20, in the future. So that's pretty high risk. And so as you start building up your assets, you may offset it by something super low risk, like even a low grade, Hall of Fame rookie card like Jim Brown. It's a very low risk. That's almost zero risk in terms of having a card like that and go to zero. Then you layer in some other cards, like other Hall of Fame rookie cards, and sets that maybe a little riskier, or players, but players that are very commonly collected, and grades that are commonly purchased. And then you may have another set of investments somewhere mid to high risk of players today that are high performers and they have a history of success that you're investing in. And now you've got this balanced portfolio where even if vintage cards get less popular and go down, or if Jalen Hurts has just a mediocre career, maybe the Barry Sanders cards offsets that loss, or Pat Mahomes has a great year and totally makes up for whatever losses. And now you've got a balanced portfolio. You have very little risk. You're not going to go to zero, and you can make the investments in Jalen Hurts and Tua or whoever you're going to buy, and not have your portfolio just crash and burn. So that's really what I wanted to get across. I know it makes common sense, but I know a lot of people when they're buying collectibles have a hard time having this idea of balancing and buying something that's not either for that they love. Like, I don't love vintage cards, I don't buy them. Or I don't like Hall of Fame rookie cards. I'd rather buy the newer stuff, modern stuff, because that's what I love. So that's fine, but just understand how that changes your risk profile. So hopefully, this was helpful. It's how I collect. It's how I look at things. Hope it helps, and I'll see you next time. Thanks. Bye.